Technically, it's often difficult to work out just how to trade a market that is at or near record highs. Where does it go from this point if it's on an upward trajectory? Well, today I'm looking at the S&P 500 December contract with Bryan Noble from tradernoble.com. He joins us now here in the studio. Bryan, welcome.
Thank you, Gary.
In addition to that, euro dollar and also your gold and silver trades as well. But I'm interested to look at these indices at record highs, the S&P most notably. You're looking at the December contract, but before we get onto that, what is it about what's happening in the market at the moment?
Yeah, it's kind of basically it's on hold until we get the next FOMC meeting in December, when most of the participants are expecting a rate hike again. I don't think we're going to get one. I think Yellen is just kicking for touch with all of this. She's trying to get the February unscathed, not causing a crash. I've never witnessed a September and October like this where the market just won't go down at all. When I was on your show 6 or 7 weeks ago, the S&P was trading 2480, and we thought that as long as we hold the 2440 area, we're going to break up, which we've done. When we traded in 3-week range at 2505, which was main resistance, broke through there 2 weeks ago and has just made new highs. We've record number of shorts on the VIX. We've sentiment at all-time highs. It's just incredible.
That's the point I think it's worth picking up on, the number of shorts on the VIX. And if you look at the sentiment wheel on the IG platform for the S&P 500, despite the fact that we're at 2546 at the moment, 75% are short this market at these levels. This is why I asked the question about how to trade this market at these levels, because when people see it at record highs, often they think it can only go in one direction, and that direction is down. So trying to take a short position at these levels.
To me, that's a really interesting chart. I'm going with if 75% of your clients are short, this market's going to squeeze higher.
Right. Okay.
Why would you be short? Because in these central bank controlled markets, the second standard deviation at 2240 was broken when Trump got elected. The third standard deviation is 2792, and the fourth standard deviation is 3344. And the reason I mention that, if you go back to the Nikkei in 1988, it broke a second standard deviation at 23,000, went all the way up, 28,000, went all the way up to 39,000 a year later, and then 8 months after that, this is the key, was down at 20,000 to 23,000. So if something similar happens in the S&P, we could well have a melt up to this 2,800 area first. Initially, I think it's mad. I think the growth in the States does not justify the earnings, does not justify VIX with a 9 handle, which seems to be forever for the last few weeks. And as I said, the record 172,000 contracts short record for the VIX. Incredible.
Part of this, of course, is anywhere else to put your money. I think that's part of it. So at these levels on the S&P 500, are you waiting to get a lower print before you start to go long, or are you long at these levels?
Well, kind of, because we're approaching new highs. Today I'm a seller between, I just day trade the S&P, so today my sell level is 2554 to 2560 with a 65 stop, looking for 5 or 6 points. Yesterday my sell level was at 52. We got a 10-point sell-off, 10-handle sell-off from that level. On the buy side, 2505 is key. I would be a very aggressive buyer from 2506 to 14 anytime if we do get a correction over the next couple of weeks. I think we will see a correction, not huge, small correction, and then we're going to have this melt-up phase, certainly a big rally into year-end. And first support really is 2530 to 3536. As long as we can hold these areas, a bit like we were talking about 6-8 weeks ago, 2440 was the big level, 2390 was the 200-day moving average. Obviously they've moved up a bit, but as long as these big levels hold, it's just extremely difficult to be short. And yes, we can all talk about sentiment and whatever. When as I mentioned before, when the Swiss National Bank allegedly have 80 billion invested in the US stock market, they're the largest shareholder in Facebook. It's extremely difficult to go against those big guys with that amount of ammunition.
Yeah, okay, I should stress again that Bryan's there trading the December 17 contract for the S&P 500. Let's move on to take a look at the euro-dollar market. Part of me is sort of thinking, we discussed this before we went live to air, as to where the euro-dollar is going. It doesn't seem to have much firm direction at the moment. It's got a lot of support coming through at 117.14 on this chart here. What are you doing with euro-dollar in this current level?
Yeah, I'm still a buyer on dips. 116.60 is a big level. I think we really need to break 116.60 and close below to see a move back down to the 114 area, 112. 112 is kind of the breakout that we had from the low of early June, from which we spiked up to just shy of 121. No matter what bad news is thrown at this euro, the whole Spanish situation, the Catalonian situation, even the German elections with the AIF getting in, still didn't throw the euro, and the euro just continues to be a buy on dips. Yes, it was way overbought at 121. Was due a correction. It's interesting though, it couldn't break down this week on the back. Even yesterday when we had the Catalonian, with their independence, it just, the euro just wants to be a buyer in dips, and also the euro, the economic data out of Europe is actually quite strong. So
but they're still pumping God knows how much money into the market. Of course, that's one thing.
Which is also but you go back to January when the euro was at 104, and we can all look at left-hand side of charts and we're all geniuses. But at 104, you had Trump come out and said the dollar was going to weaken. You had Merkel come out and said the dollar was going to weaken, and crucially, the Bundesbank said the dollar was going to weaken. Yeah. So when you've got the three main guys who have quite an influence on this currency, want to see a weaker dollar, that's exactly what we got.
Yeah, so that's exactly what we got. You talk it up, and that's what happened for euro dollar. Where would you put your stop at these sort of levels? What are you looking at in terms of safety?
I'd be a buyer today. I'm a buyer 117.40 to 117.80. I'd have a wider I'd have initial stop at 116.95. If that got triggered, I'd be a very aggressive buyer into this 116.60, big support with a 115.80 stop. On the sell side, not really comfortable going short. I've tried to go short a couple of times, and you've got to be really nimble. So I think the path of least resistance is still up for the euro.
Yeah. Okay. All right. Fine. Let's get on to precious metals. We've spoken before about your long silver position, which I know has actually yielded some nice profits, hasn't it?
Yeah. I mean, silver had a nice buy extreme on Friday. I had a buy level at 16.40. 32 was the low. Silver rallied 4% between Friday evening and Monday morning. Huge rally back up to 17.20 again. It really needs to clear 17.44 to get really bullish on silver. Against that today, I don't want to chase it. One thing I look for when silver came all the way down from that 18.50 and change high down to that 16.30, the daily sentiment index was only at 30% buzz. I'd like to have seen that in single digits. Then I would have got really loaded up in silver. So I'm a small buyer today from 16.60 to 16.90 with a 16.30 stop just below Friday's low.
Okay, all right. And the gold trade at the moment, again, this is one of the ones we were talking about before you went to air, and you were talking there about the rare occasion you've got a view on taking a short position if it got to a certain level. Explain what's going on.
Yeah, gold, again, similar to silver, had another buy extreme on Friday. 12.65 is big support. We got down to a low 12.61 on Friday afternoon after the NFP data. Rallied back up to 12.92, 12.93 again. The real level for gold is 13.09 to 15. If we can break and close above that, then I think we could go back and test the 13.75 highs. Today I'm a seller into this resistance. I think it's just such a key level. Everybody that I know is long gold. Everybody I speak to is long gold. Sentiment in the levels are still at quite high levels. That's why I'm nervous to be a buyer of gold. I'll be a small buyer into this 12.65 support. Again, unfortunately gold missed my buy level by $3 on Friday before having this rally. I was trying to be too clever with it, but when I really look at the sentiment is key for the gold, and again, we didn't get down near the single digits, and every time that DSI gets to those kind of levels, or on the top side when it gets up to 75-80% bulls, it's a lot easier to go short when you've got that kind of sentiment behind you.
Yep. Okay. All right. So Bryan, thanks indeed for joining us. Bryan Noble from tradernoble.com, and as Bryan was saying, you've got to be nimble, you've got to be quick, and also don't forget your stops when you're trading these markets, because things can snap around and you can get caught the wrong side. You don't want to be caught the wrong side without a stop.